Imagine you and your spouse have shared the same bank account for 40 years. It is a Tuesday morning. You walk into the local grocery store, swipe your debit card for a $60 cart of food, and the screen says declined. You step outside, call your local bank branch, and a representative tells you your entire life savings is completely frozen for the next 15 business days. Not because you were hacked. Not because you bounced a check. But because the bank decided they needed to protect you. My name is David Taylor from Senior Money Brief. And I need to warn you about a quiet shift in the banking system that is turning the most deeply held belief married seniors have against them. You probably assume that having both your names on a joint bank account means you both have equal, permanent access to your own money. You assume that if something happens to one of you, the other can still pay the mortgage, buy the medication, and keep the lights on. That is no longer true. By January 2027, an aggressive expansion of what the government calls safe harbor banking laws will be fully weaponized across the country. These rules were quietly designed to stop elder fraud. But what they actually do is hand your bank the absolute legal power to lock down an entire joint account without warning, simply because you crossed an invisible age line. Here is the terrifying part. They do not just freeze a single suspicious transaction. And they do not just freeze the spouse who made it. They freeze the entire pot of money. If your husband buys something unusual online, or your wife tries to wire money to a grandchild, the bank's computer flags it. And just like that, the innocent spouse is completely locked out of their own survival money for up to 3 full weeks. The very thing you thought protected you, sharing the account, is exactly what traps you. To protect your money, you first need to understand the quiet new law that suddenly made your age a financial liability. For years, if a bank suspected you were being scammed, their hands were mostly tied. If a teller thought a withdrawal looked suspicious and refused to hand over your cash, and it turned out they were completely wrong, you could sue the bank. You could drag them to court for denying you access to your own legal property. Because of that fear, banks largely stayed out of your business. They let the money move. But then, the losses exploded. Billions of dollars started vanishing every year to romance scammers, fake IRS agents, and criminals pretending to be grandchildren in jail. Lawmakers panicked. They decided the only way to stop the bleeding was to give the banks the power to step in. So, they created what are called safe harbor laws. By January 2027, the aggressive rollout of these rules will be nearly universal. Here is what a safe harbor law actually does in plain English. It says that if a bank reasonably believes an older customer is being financially exploited, the bank can freeze the transaction. They can hold the money. They can block the transfer. And most importantly, you cannot hold them responsible for the delay. The law gives the bank absolute legal immunity. They are completely protected from the consequences of being wrong. But who exactly are they protecting? The legal term written into these new laws is specified adult. And a specified adult means anyone 65 and older. That is the line. The exact day you blow out the candles on your 65th birthday, you quietly become part of a special category. You lose the standard banking rights that younger Americans take for granted. You are suddenly viewed by the financial system as someone who needs to be watched. And this is where the quiet indignation sets in for so many of the families I speak with. A law that was written with the best of intentions to save your retirement is now the exact tool that can leave you standing at a pharmacy counter, unable to pay for the blood pressure medication you need to survive. You might be thinking, well, my local branch manager knows me. They know my husband and I are fine. But here is the terrifying reality. The local branch manager isn't the one watching your money anymore. The human teller behind the desk at your local branch is not the one deciding to freeze your account. The banks have quietly handed that massive responsibility over to artificial intelligence. Right now, a computer program is actively mapping what the banking industry calls your financial heartbeat. It tracks the daily rhythm of your money. It knows exactly how much you spend, the specific stores you visit, where you physically log in, and who you usually pay. And the very second you break that predictable rhythm, the algorithm flags you. There are 3 completely innocent moves that seniors make every single week that trigger this trap. Move number 1 is the sudden, out-of-character purchase. Let's say you have maintained a quiet, predictable checking account for 5 years. Your Social Security check comes in, your grocery and utility bills go out. Then, your old refrigerator suddenly dies. You drive to a big box store and swipe your joint debit card for $2,500 to buy a replacement. To the machine, that does not look like a broken appliance. It looks like a criminal rapidly draining your hard-earned funds. Move number 2 is the new digital transfer. Imagine your granddaughter is heading to college, and you want to help her pay for textbooks. So, for the very first time, you use Zelle on your phone to send her a few $100s. You are just being a loving grandparent. But the algorithm sees a sudden electronic transfer to a brand new recipient from an account owned by a 70-year-old. That fits the exact profile of a grandparent scam. Move number 3 catches people in their own living rooms. The digital anomaly. Let's say your children buy you a brand new iPad for your birthday. You turn it on, sit at the kitchen table, and log into your online banking to check your balance. The bank's security system sees an unrecognized new device accessing a senior citizen's life savings. The trap snaps shut immediately, with no warning. None of these actions mean you are being exploited. All of them are completely normal parts of living your life and spending your own money. But the computer does not care. It pulls the alarm, and your account goes dark. And remember, the standard freeze window written into these new laws is up to 15 business days. Add in the weekends and federal holidays, and you are staring down 3 full weeks with zero cash. But if you think that sounds terrible, wait until you see what happens to the spouse sitting right next to you at the kitchen table. This brings us to the most devastating part of this entire system. It is the hidden danger buried inside every single joint account in America. When that algorithm pulls the alarm, the bank does not just block the one suspicious purchase. They do not just deactivate the one debit card used for the transaction. They freeze the entire account, the whole pot of money. Let me introduce you to Robert and Linda. They have been married for 45 years, living a quiet life in Ohio. Both of their Social Security checks deposit directly into the same joint checking account they have used since the 1980s. One afternoon, Robert gets an email that looks exactly like his antivirus software asking for a routine renewal. He clicks the link and pays $90. It was a scam. The bank's AI system catches it, flags the transaction, and instantly throws a wall around their life savings to protect Robert. The next morning, Linda drives to the pharmacy. She needs to pick up her insulin and her heart medication. She hands the pharmacist her debit card, and it is instantly declined. Confused and embarrassed, Linda calls the customer service number on the back of her card. The representative tells her the account is under a fraud investigation because of Robert's online purchase. It is locked for the next 15 business days. Linda tries to reason with them. She says, "I understand you are looking into Robert's purchase, but my name is on this account too. My Social Security check was just deposited yesterday. I had absolutely nothing to do with that email, and I need my medicine to survive. Just let me withdraw my half of the money." And the bank tells her the terrifying truth. "We are sorry, ma'am. We cannot separate the funds." The entire account is frozen. Linda is officially collateral damage. She did absolutely nothing wrong, yet she is completely locked out of her own survival money. Her direct deposits will keep going in, but she cannot pull a single dollar out. She cannot buy her insulin. She cannot pay the electric bill. She cannot buy groceries. The joint account, the very tool Robert and Linda used to manage their lives together as a team, became a trap that locked them both in the dark. When an older couple suddenly realizes they are staring down 3 weeks with zero cash, panic sets in. And in that panic, people often try to get clever. They try to outsmart the bank to get their own cash. And that is exactly how innocent seniors accidentally commit a federal crime. When seniors first learn about these unpredictable AI freezes, they almost always try to outsmart the system. They sit at the kitchen table and think, "I know exactly what to do. I just will not make any massive, sudden withdrawals that alert the bank." Let's say you need $15,000 to pay for a major roof repair, a medical bill, or to help your child. You know that asking for $15,000 all at once might trigger the algorithm and freeze your joint account. You have also probably heard that any cash withdrawal of $10,000 or more automatically gets reported to the federal government. So, you come up with a plan you think is perfectly legal and perfectly safe. You decide to go to your local branch on Monday and withdraw $8,000. Then, you wait until Thursday, go back, and take out another $7,000. You keep both transactions quietly under that $10,000 radar. You walk out thinking you just successfully bypassed the bank's security freeze without raising any alarms. But here is the brutal reality. What you just did is not a clever workaround. It is a severe federal crime called structuring, and the bank's computer system is specifically designed to catch it. It absolutely does not matter that the money is 100% yours. It does not matter that you earned it honestly over a 40-year career and paid every single cent of taxes on it. The federal government dictates that the mere act of breaking up your withdrawals, specifically to avoid that $10,000 reporting limit, is an illegal act. When the machine flags you for structuring, the outcome is far worse than a temporary 15-day hold. Under federal rules, your account can be seized. Your honest, legally earned life savings can be confiscated by the government simply because your pattern of withdrawals made it look like you had something to hide. You tried to be careful, and it cost you your money permanently. Do not ever try to sneak your own money past the machine. The danger was never the routine bank report. The danger is looking like you are trying to dodge it. Now that you see exactly how this trap closes and why trying to outsmart it only makes it worse, you need the actual, legal solution. It is time to show you the first real shield. You know the trap. You know the computer can lock you and your spouse out of your own money in an instant. So, how do you actually stop it? There is one free, incredibly simple step you can take this very afternoon. It takes about 5 minutes, and it is the single best defense against these new banking laws. It is called adding a trusted contact to your joint bank account. Almost every major bank and brokerage in the country offers this option right now, but they rarely advertise it. Because of that, shockingly few older Americans actually have one on file. Here is why this one simple move changes everything. When that algorithm flags your account, whether you bought a new computer, sent money to a grandchild, or logged in from a new iPad, the bank's default move under the new safe harbor rules is to immediately freeze the money. But if you have a trusted contact on file, you give the bank an alternative. You give them a human being to call before they pull the alarm. Instead of slamming the vault shut for 15 business days, the fraud department reaches out to the person you named, usually an adult child, a sibling, or a lifelong friend. The bank asks, "We see a large transfer. Is everything okay?" And your daughter simply says, "Yes, my parents are paying a contractor to fix their roof." It is perfectly normal. Just like that, the alert is cleared. The freeze never happens. You have preloaded the answer before the bank even had to ask the question. Now, listen closely to this part because I know seniors get nervous about handing over control of their hard-earned money. A trusted contact cannot touch a single dollar. They cannot see your account balance. They cannot make a withdrawal, and they cannot sign a check. They have absolutely zero financial power over your life. All they can do is vouch for you. They act as a human circuit breaker that stops a blind computer from locking you out of your survival money. Call the customer service number on the back of your debit card today and ask to add a trusted contact. It costs you nothing, but a trusted contact only helps stop a freeze from starting. What happens if the freeze slips through anyway? You cannot rely on just one shield. You need the ultimate backup plan. A trusted contact is your first line of defense, but it is not bulletproof. If the bank cannot reach your contact, or if the algorithm decides the risk is too high anyway, the vault still slams shut. To protect your retirement, you must secure the final 2 pieces of the puzzle. The first piece is about breaking a very dangerous myth. Millions of seniors print a generic power of attorney form off the internet, sign it, and toss it in a desk drawer. They assume that if their joint account gets frozen, their adult child can just wave that piece of paper at a bank teller and unlock the money. That is not how modern banking works. Banks despise generic power of attorney forms. Their legal departments view them as massive liabilities. If your child walks into a branch with a form they bought online for $20, the teller will almost certainly reject it. The fraud department will completely ignore it, and your money will stay frozen. The fix is simple, but you have to do it before the crisis hits. Walk into your physical bank branch this week. Tell the manager, "I want to put your specific, bank-approved power of attorney form on file for my account." Every major institution has their own proprietary paperwork. If you fill out their form, using their exact legal language, they cannot reject it later when you are standing there in an emergency. But even with the right paperwork, the reality remains. If the bank decides to use its safe harbor powers, a joint account can still be locked down. This brings us to the ultimate, non-negotiable backup plan for every married couple over 65. You must stop keeping every single dollar you own inside one single joint account. If all your eggs are in one basket, a single mistaken AI flag starves both you and your spouse. The solution is financial separation. Tomorrow, the husband must walk into a completely different bank, an entirely separate institution, and open a small checking account in his name only. The wife must do the exact same thing at a third bank, in her name only. Move just enough money into those solo accounts to cover your essential bills for 1 month. 1 month of groceries, 1 month of utilities, 1 month of medication. If your primary joint account gets frozen by an aggressive algorithm, you do not panic. You simply reach for the debit card connected to your solo account. The lights stay on. The medication gets paid for. You have stripped the bank of its power to hold your life hostage. You have secured your money. But what if you wake up tomorrow and the freeze has already happened? You need to know exactly how to fight back in the first 48 hours. If you wake up tomorrow morning and your joint account is frozen, the very first thing you must do is stay completely calm. Do not march into your local bank branch and scream at the teller. Do not spend 2 hours shouting at the minimum wage customer service representative on the phone. They did not freeze your account, and they absolutely do not have the security clearance to unfreeze it. Yelling at them only wastes precious time. The first 48 hours dictate how long you will be locked out of your money. Here is your exact emergency checklist. Step 1. Ask the person on the phone for only 2 pieces of information. Which specific department placed this hold, and what is their direct phone number? You need to be talking to the Fraud or Loss Prevention Unit, not the General Help Desk. Step 2. Demand a written explanation. Federal and state banking rules generally require institutions to tell you exactly why your money is being held. Ask them to email or physically mail you the specific reason for the freeze and the exact timeline they expect the investigation to take. When a bank knows you are documenting their actions, they move faster. Step 3. Escalate instantly. Offer up your trusted contact immediately if the bank hasn't already called them. If you were simply moving your own money to buy a car or fix a roof, offer to provide a copy of the invoice or a signed letter from the dealership. Overwhelm their investigation with proof that you are perfectly fine. Step 4. If the bank drags their feet past the initial few days, stop dealing with them and go above their heads. Every single state has an office that regulates banks, usually the Department of Financial Protection or the State Attorney General's office. File an immediate, formal complaint on their website. The moment a state regulator contacts a bank about an unjustified senior freeze, that investigation mysteriously wraps up in a matter of hours. You worked your entire life for that money. It belongs to you, and it belongs to your spouse. Do not let an invisible computer algorithm dictate whether or not you get to buy groceries this week. Add a trusted contact today, file the correct power of attorney tomorrow, and spread your cash across separate banks. I'm David Taylor from Senior Money Brief. If this video helped you protect your retirement, share it with another older American who is still putting all their trust in one single joint account. Subscribe to the channel so the next warning finds you in time, and I will see you in the next video.